Today, talks remain stalled between Democrats and Republicans over the next round of coronavirus relief. We explain what's holding up lawmakers. Plus, we take a look at the different investing strategies among millennials compared to the baby boomer generation. Spoiler alert, big tech stocks transcend age. And finally, New York faces a rental crisis as tenants flee the city because of COVID-19. I'm MacKenzie Sigalos, and this is CNBC After Hours. The Dow and S&P 500 both closed in the red today, but the tech-heavy NASDAQ ended the session in positive territory. Initial jobless claims, which is just finance speak for the number of new people applying for unemployment benefits, fell below 1 million for the first time since March. Now that's a good thing, but not enough of a good thing to turn markets around. Also during the trading session, the S&P inched closer to its all-time intraday high, which it set on February 19, 2020. Apple shares gained about 1% after news broke that the smartphone giant is working on a top-secret new app for the iPhone called Seymour. The app will reportedly guide users through workout routines on Apple Watches and iPhones. Outside of Wall Street, all eyes remain on talks between Republicans and Democrats on the next round of economic relief for the coronavirus pandemic. White House economic advisor Larry Kudlow told CNBC today that talks remain at a stalemate. And what's more, the Senate remains in recess until Labor Day. We talked with CNBC's Eamon Javers in D.C. to get the latest on the stimulus showdown.
The main issue here is the size of the package overall. The Democrats have a bill out at $3.4 trillion. Republicans have said what they want is $1 trillion, and they seem to be unable to simply meet in the middle at $2 trillion because the Democrats are pushing for a lot more items in that bill than Republicans say they're comfortable with. Republicans say it's simply too complicated and too expensive. Democrats say the Republicans are simply failing to grasp the scale of the problem that the country faces right now. The president has taken a hands-off approach here. He has not been involved in direct negotiations. As far as we know, he hasn't even spoken to Nancy Pelosi, the Speaker of the House, since earlier in the year. So this is a president who is at some remove from the room where the decisions are being made. Obviously, he's the one who decides whether he's going to sign any final deal or not. And Democrats have complained that the president is making inconsistent noises about what he actually wants in this deal. And they say they can't get a lock from his negotiators on what it is the president actually wants to accomplish here. The president has said that what the Democrats are doing is simply putting together a liberal wish list of things that they'd like to do anyway and using the excuse of the coronavirus as an opportunity to pass a lot of things that he doesn't want to pass. The problem here is there's no real forcing mechanism. Congress doesn't work well unless there's a real deadline that all sides are afraid of hitting. That deadline was the expiration of the $600 a week bonus unemployment, and they ran through that a week and a half ago or so. Now there's really nothing on the horizon that means that they need to get this done this month, really. The next thing we'll see ultimately is the idea of children going back to school or not going back to school around the country. And I think college football being canceled around the country is really going to sting a lot of people. Just in terms of the entire society, that's something that we feel as part of the rhythm of what the fall is. All of those things are going to cause people to really feel that this country is not on the right track as we get into September. I think that can have some pressuring effects here on the politicians, and we'll see whether that's enough to move them past their political differences in terms of these negotiations. So far, it hasn't been enough, and there's a lot of pressure on them already. The economy is losing that big stimulus of the $600 bonus unemployment per week for a lot of unemployed Americans. There's lots and lots of Americans who are using that as a real lifeline to keep them afloat financially, and it also keeps the economy afloat because all that money gets spent right away and injected right into the economy as people buy food and clothes and pay rent and do all the things they need to do in the economy. That liquidity is now sucked out of the economy, and that's going to be a problem. And then I think the next big problem that we have to look forward to is the PPP legislation that we saw earlier in the year. That's that small business lending program that kept so many small businesses alive in the early stages of this. Those small businesses are facing an extinction level event here if they're not able to get more access to cash, because they're obviously not able to open up restaurants, movie theaters. All the small businesses in your town or neighborhood are really suffering right now. And if we don't see another round of PPP, I worry that we're going to see a shuttering of doors across the country.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
President Trump has acted forcefully because we couldn't reach a deal with the Democrats. They're asking too much money, $3.5 trillion. We've already spent over $3 trillion. So much of the Democratic asks are really liberal left wish lists. We don't want to have voting rights and aid to aliens and so forth. That's not our game, and the president can't accept that kind of deal.
You see more younger investors wanting to have impact with their investment. We've talked about before the shift of wealth in the U.S. More women now control more wealth than men, and that percentage is shifting globally. And I think as we've seen some of these gross inequities come more to the forefront, people want to have impact with their investment dollar.
Customers have changed their buying preferences from used to sell cars in the $28,000 to $30,000 range, and now the demand is actually in the $23,000 to $25,000 range. The used car market is healthy and a great place for consumers to get great value in vehicles. They get really much more for their money. So we see great long-term prospects in the used car space.
While you put this in your pocket and you go about through your everyday life, it's keeping track anonymously with all of the people that you're coming in contact or physical proximity with. If one of those people later tests positive, it means you have been potentially exposed. Now, it's not a free test if you just want to take a test for the sake of taking a test. It's a free test if you've been potentially exposed by the contact tracing network, then you're qualified for a free test.
All right, everyone remember that OK Boomer meme from a while back? Jokes aside, part of that came from angst over the differences in wealth and opportunities between older and younger generations. Now, the baby boomer generation controls a huge swath of the stock market, but recently, apps like Robinhood and others that offer zero commission trading are allowing millennials to get into the stock market in a big way. And there is indeed a generational divide when it comes to investing strategies between boomers and millennials. Aside from big tech companies like Apple, Amazon, and Microsoft, the two age groups pick very different stocks. We spoke to CNBC's Kate Rooney about how the two generations approach the stock market.
Big tech is still a fan favorite, but there's a little less consensus among generations when it comes to some other sectors. Baby boomers aged 56 to 74 tend to hold more shares of traditional pharmaceutical companies. That's according to a new report from Apex Clearing. Abbott Labs, Bristol Myers Squibb, and Merck ranked in the middle of the pack for boomers' top 100 stocks in the second quarter, but they didn't even make the list for millennials. Those ages 24 to 39, meanwhile, were, quote, more notably eager than older generations to buy the pandemic-driven dip in travel stocks. Norwegian Cruise Lines, Royal Caribbean, and Spirit Airlines landed in the top half of millennials' list of favorite stocks. For boomers, though, those beaten-down travel names were not in the top 100. There was one pharma name that millennials were buying, vaccine company Moderna. That stock made the list for the first time, coming in at number 40. Like I mentioned, though, still all about big tech. Apple, Amazon, Tesla, Microsoft, and Facebook are among the top 5 for both generations. Analysts say this has been helped by a rise in fractional trading, making some of those $1,000 stocks a bit more accessible.
Okay, time for today's numbers round. Lyft reported a dramatic 61% drop in revenue in the second quarter versus the prior year, which isn't all that surprising given that everyone was expecting rides to slow way down thanks to the pandemic keeping people home. But there's more bad news for Lyft. Co-founder John Zimmer warned that the company may need to shut down its ride-sharing business in California starting next week if a court doesn't overturn a ruling requiring the company to classify its drivers as employees instead of independent gig contractors. That would mean Lyft would have to provide benefits like overtime and sick leave, which would translate to extra costs for the company. It's a similar story for Uber. But it wasn't all bad news for Lyft. Monthly rides jumped 78% in July compared to April, suggesting that a recovery might be underway. And finally, 13,000. There are more than 13,000 apartments sitting empty in Manhattan as hundreds of thousands of residents fled the city and landlords struggled to find new tenants. The number of apartments for rent more than doubled over the last year, its highest level in recent history. That's according to a report from Douglas Elliman and Miller Samuel. Brokers and landlords had hoped that many would start returning this summer as the city's lockdown eased, but the renting slowdown suggests that Manhattan's real estate and economic troubles could extend well into the fall or beyond. That's it for After Hours, but before we go, here's one more thing to keep an eye on. The Democratic National Convention kicks off on Monday. Now, during the 4-day virtual event, presumptive Democratic nominee Joe Biden and his VP pick Kamala Harris will accept the nomination from home. Expect to see speeches from Bill and Hillary Clinton, Michelle and Barack Obama, and Alexandria Ocasio-Cortez, among other top names in the party. Keep up to date with everything happening at the DNC by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday and Thursday, so be sure to catch us then. And we'll be back with our Friday edition of After Hours next week.